Hello, I'm Natasha Chilingarian.
And I'm Michael Ogden. This is Shared Accounts with CU Times. April Fool's Day is long gone. We've paid our taxes. Maybe we asked for an extension. No judging. We've reached the end of a month where one of the top Google searches was, "Why do my eyes hurt?" Eclipse reference. It was a silly month. It was a busy month. A month where we felt the first warmth of the spring sun and instantly regretted not exercising all winter. Will I stop eating Fritos? No. Will I be proactive about next year's taxes? Also, no. It's the end of April, and that means it's the end of Grab Bag Month. Welcome to Shared Accounts with CU Times. Coming up, we'll be talking with David Savoie. He's the president and CEO of Louisiana Corporate Credit Union. He is actually the first guest we've had from a corporate credit union. He has a lot to say about credit union mergers. And you know what? There are really a lot of people in the industry who have concerns about credit union merger approvals and that process, but they're not necessarily voicing those concerns publicly. David's one of those people who doesn't necessarily hold back and isn't afraid to go on the record about it. So stay tuned for that. First up, we have to take a break from this week. Check in with Natasha. Hey, N.
Hey, Em.
I have a question for you.
Okay.
Speaking of Fritos, do you have a favorite chip or, snack like that?
I wouldn't say a favorite chip, but I do have it's when it comes to, like, crunchy snacks, so I'm a big
Sure.
popcorn person. Any
Oh.
popcorn I love. There's also it's a crunchy snack mix that I love,
Hmm.
and I get it from Costco, and every time I place an order from Costco, like, I have to spend $75 to get the free shipping, so I
Yeah,
always
yeah.
add it on. It's like, "Oh, I'll get another one of those." It's this pub snack mix. It's
Oh, I know
delicious.
exactly what that
Yes,
is.
I love that.
What an enabling order. Well, I have to get the
I had to get it
$75.
again, yep, oops, oh, I finished another one. Yep,
Oh, that's funny. I'm a sucker for Doritos, but that's a good call from Costco.
those are always good too, yes.
Okay, I
Mm.
have to ask, I mean, it has been a busy week, but what did you watch this past week?
You're right, it has been busy, but I have snuck in some TV time.
Mhm.
Over the weekend, one movie I watched that's been on my list for a while, Priscilla on Max, which is about Priscilla
Yeah.
Presley.
Mhm.
So, watch that. It was okay. I have to add, I watched it was at the very end of a day that I spent wine tasting with some
Oh.
friends. So, I will say, I think I probably fell asleep a few times during the movie,
Alright.
but I think overall it was good. It's just, the whole idea of a 14-year-old girl with
Oh,
I'm sorry, but
yeah.
it's just a little creepy.
I started it but did not finish.
Okay, was it because you were creeped out by her age?
I was creeped out, but also I'm not that interested in Elvis and that whole thing. Can I
Right,
tell you a
right.
quick Elvis story?
Sure.
How I found out that Elvis died, I
Okay.
was whatever, it was 1970, whatever that was. I was in the back seat of my grandfather's Cadillac. We were driving from Florida back to Arkansas, and he had a CB radio, which everybody had those
Right.
back then. And a trucker comes on, "Hey, the king is dead." And initially, people were thinking, what, like King George? And then they were like, "Oh, Elvis." So that's how I found Elvis has died.
Oh, fun, and well, not so fun,
CB
but
radio.
yeah, interesting story. I think I was a little too young to remember that,
Sure.
but I do remember I have a distinct memory of one of my good friends, her little brother running around the house yelling, "Elvis died on the toilet," mocking it, and I was like, "What?" Like,
Okay.
I didn't even know what he was talking about, but
All right.
that's sort
That's
of anyway, okay, so I watched that. Another
Mhm.
show I wanna bring up on Netflix, the show Ripley.
Oh,
I think I
yeah.
have about 3 episodes left now. Really
Mhm.
good, really enjoying it so far.
Still have only watched the first episode. I'm kind of waiting when I have a good chunk of time to watch it, but it looks beautiful.
Beautifully shot. Oh, I love it, and it's mostly in Italy, and it's in the '60s, and it's just yes, gorgeous.
Love it.
Yeah, it gets good, so we'll have to
Okay.
chat later and debrief once you get through it, so
Please, I wanna hear about it.
anything else that you've been watching that you wanted to bring up?
You know what? For whatever reason, last night, I decided to watch haven't watched it in years, 1973's The Exorcist.
Oh, wow.
It
Okay.
was a blast. It was so good. And as a mature adult, it was just so much better than just being scared as a kid.
Oh,
But
sure.
the story was great. I had a really good time with it.
Good time with all the projectile vomiting is a good time
Sure.
for you?
The thing
Okay.
was, it was all practical effects, and
Yeah, yeah,
I thought it was great. I had fun.
yeah.
Worth rewatching.
So many good classic horror movies that gotta revisit.
Agree.
Okay, cool. All right. Well, I guess we should move on to the topic for today. So we have on David Savoie as our guest.
Yep.
We asked him to come on actually after he submitted an editorial for us. It pretty sharply criticized the process that some credit unions are following to
Hmm.
approve and share information about their mergers. And one thing I thought was striking about the article that he wrote for us is that he started out by saying that when a credit union puts out a press release about a merger, it always cites the same two reasons for that merger: economies of scale and expanded services. And then he goes on to say that those aren't necessarily the true reasons or what really aligns with their reasoning for the merger.
Hmm.
And that got me thinking about what a big disconnect there is often between what a credit union will say in a press release or an official statement, and a disconnect between that and then what's really going on at the credit
Yep.
union. Isn't that something that you think we face a lot and also maybe roll our eyes at a lot, Em?
Yeah, absolutely. I mean, I've been on the other side as a public relations and marketing professional a
Right,
while ago. And yeah, there is that weird game you have to play with how straightforward an executive wants to be.
right.
And it's a tough needle to thread at times. So a lot of times they're pretty protective about things like that. There's a lot of money at stake. So,
Yep. Yeah, it is interesting. And I've been on the other side as well.
hmm.
And yeah, I think it really depends. But I think from our perspective as a news organization, when you can tell they're just like putting it all out there, it's like,
Hmm.
wow. And that it's exciting for us. And we're kind
Uh,
of like, are you sure you want to say that? But
right, 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 right.
yeah, it's fascinating. But yeah, we have definitely had to read between the lines a lot of the time with some of
Oh yeah.
the statements that have come in. So well, let's go ahead and get into our interview with David. Aside from sharing his true feelings about credit union mergers, David also talks about his time as an NCUA examiner.
Hmm.
He shares what I think is a really funny story about how he stumbled into the credit union industry. And he also shares some really interesting tidbits from the time he spent at Guantanamo Bay while serving in the Navy. We have all of that coming up next.
Hey, listeners, I'm going to mention our new editorial service for our subscribers called the Executive Briefing. Yes, that Executive Briefing. The one you've heard people talking about at cocktail parties and in that weird aisle at TJ Maxx where they sell random packages of pasta. Well, if you haven't heard about it, I'll explain. This monthly newsletter, available by subscription only, is comprised of exclusive editorial content and analysis of credit union data, trends, and news, information you won't find online because we don't put it online. It's only available to subscribers. You'll get access to this content only in your inbox, and it'll help grow your organization and better serve your members. In April, we took a detailed look at credit union and fintech partnerships. In May, you will get our data analysis about credit cards and what credit union members want. To subscribe, go to cutimes.com/subscribe. That's cutimes.com/subscribe. It's one of the new ways we are expanding our CU Times digital world for you. The executive briefing at cutimes.com/subscribe.
Okay, credit union mergers. Let's jump in. Joining us in the virtual studio today is Louisiana Corporate Credit Union CEO David Savoie. David, welcome to the show.
Thank you. Thanks for having me.
Hey, David.
Mike.
Appreciate it. Okay, so David, let's kind of set things up for the audience here. Before you became a CEO, you actually served as an NCUA examiner. Is that correct?
That's right. I started with NCUA in 1987 as a regular district examiner in New Orleans, and I had about.
So, yeah, I wanted to just ask you a little bit more about that and how you got into it. So, was that your very first credit union industry role? And then also, what led you into that role and into the industry overall?
I was working at a CPA firm in New Orleans at the time, a small one.
Hmm.
Hmm.
And the New Orleans economy at the time was very much based on the oil industry. And it was a time when a lot of oil companies were relocating their headquarters from New Orleans to Houston. I
Hmm.
think there was a decline in drilling in the Gulf. and a lot of people were laying off. So just as a precaution, I filed a general federal application, an SF-171, and almost forgot about it when I got a call from John Konopka, who was the supervisory examiner in Louisiana. And he said he was with the National Credit Union Administration. And at first I thought he was some kind of bill collector. So I probably didn't respond very nicely, but he didn't care. And he needed to hire an examiner, and he hired me. I wanted to specialize a little bit. I was at a very general CPA firm doing a little bit of everything. I wanted to specialize more. I thought it'd be a good opportunity, and I've never
Sure.
regretted it.
I have to say there's so many stories about how people accidentally entered the industry, and that's gotta be one of my favorites.
Yeah, I will say, David, you're not our first to accidentally stumble in, so that's
Yeah.
funny.
Yeah.
How long have you been CEO at Louisiana Corporate?
Since 1998, so it'd be 26 years and going forward from there.
Well, good for you. What led to that transition from thinking a bill collector was coming after you, going to NCUA, and to your current role? What was that transition?
My first 7 years at NCUA, I was a district examiner in New Orleans
hmm
in South Louisiana. So I had responsibility for about 30 credit unions. There were twice as many credit unions in Louisiana back then. A lot of them were small. I did a lot of one-person exams where there was no examination team. It was me and sometimes one other person in the office. I remember a lot of them were still on manual record keeping at the time.
Oh,
They
sure.
had your cards and files and actual journals with ink and paper.
Hmm.
It was a good job. After about 7 years, they were restaffing the corporate credit union examination program out of Washington, and it was because Capcor in Maryland had just failed, and they were going to restaff the whole program. And the regional director in Region 3, Alan Carver, was appointed as director of the corporate credit union office at the time. And I applied and got the position and did that for 3 years. And it was opportunity to learn a lot about investments, learn about corporates. There were 30 corporates at the time, and I traveled to all of them, plus some of their QSOs. So as best I can count now, I think I went to 35 states in 3 years. And at the end of
Wow.
that process, I had young children and a wife, and I just had enough of the travel. So when the job opened at Louisiana Corporate, I was invited to apply for it. I did, got the job, and never regretted that.
So that application wasn't a shock.
No.
No, okay. Just checking.
Now, a lot of people in Louisiana were shocked that they hired an NCUA,
There you go.
but they knew me, staff knew me, and they
Yeah,
were comfortable.
great.
And David, so you're actually the first guest we've had on the podcast who's been from a corporate as opposed to just a traditional credit union. So I wanted to ask, what are the main differences between serving as a CEO of a corporate credit union as opposed to the role of a CEO at a traditional consumer serving credit union?
Well, of course, I've never been a CEO at Natural Person
Of
Credit
course.
Union. That's what we call them in the corporate side of the business. We refer to
Right.
them as NPCUs or Natural Person Credit Unions. It's kind of a corporate term. I don't think it's generally used in the business, but I know that they spend a lot of time, of course, dealing with consumer lending and mortgage lending, which is their bread and butter. And we probably spend that time here dealing with the investment portfolio a lot more than a Natural Person Credit Union does. We're dealing with other credit union professionals as our members and board members. They're dealing with their individual members and membership bases. And in the cases of community charters, they're dealing almost with the general public. So I imagine that's a big difference too.
So let's get into the merger topic for a bit. So, to what extent have you been involved with credit union industry mergers? Well, let's just cover your whole career. How involved have you been?
From the time I started with NSWA, from my very first year, when a merger occurred involving a credit union I was assigned to, I had responsibility for that. So everything from shepherding the merger application process through making sure the right paperwork got to NCUA, writing a field level recommendation on approval or disapproval, and even assisting with working out operational details just to make sure there was no interruption in member service. And I worked on a number of those, started seeing a common thread among those that nearly all of them involved a key person retiring,
Yeah.
and they were going to be leaving the merger credit union. And I thought some of them could have been avoided by starting a replacement process earlier.
hmm
A few times, the key person retiring, and they realized, and the board realized that they didn't have a retirement plan.
Whoops.
You know, it's not uncommon. I know it wasn't then for somebody to get a year, 2 years from retirement and ask the board for a retirement plan, in which case it's probably too late. So a lot of times in those cases, they realize, well, we can merge, that person can go to work for for the continuing credit union for a few years, get on their plan, get vested, and they'll have something. So there might have been other reasons for the merger, very valid reasons too, but that
Mhm.
would have been one. I thought both of those things were, avoidable.
Has Louisiana Corporate been through any mergers since you've been CEO?
Well, no, we have not. After the failure of U.S. Central and we all had to rebuild capital,
Hmm.
NSWA was encouraging a lot of the smaller credit unions to, I'll say, think about merger. So we had discussions, but we were always able to keep going. I thought that was one of the best experiences in my career here was after US Central failed, we had to move all the services they provided to other vendors. So there was no single vendor that was going to do all of that.
Hmm.
Before that, the corporates like us would be referred to by some people as pass-through corporates, kind of a divisive term by some of the larger corporates on the U.S. Central Board. So I took it as a challenge. I was really so proud of my staff. They stepped up and we replaced every service that U.S. Central was providing with other vendors and the liquidity with the Federal Home Loan Bank.
Yeah.
It really turned out better than I was expecting. Great experience.
And David, and now, so this is actually one of the reasons why we invited you on today. You've sort of taken a stance that there really are currently some problems going on in the credit union merger process. And one of those things that you mentioned is that the leaders of the merging credit unions aren't being totally transparent or honest with their members about the reasoning behind the merger. So when did you start to kind of notice problems with the merger process? Not obviously within your own credit union, but just as an observer of the rest of the industry. When did you start to notice there were some problems, and what are those problems that you've been seeing?
Well, first, I'd say that I've written about the issues with the process. These are things I've noticed for years since the very first mergers I was involved with. And I'm not referring to any particular merger.
Right.
I think a lot of mergers are absolutely necessary. I think the process needs improvement. In the vast majority of cases, I don't think there's dishonesty involved. I don't think managers are trying to be dishonest or not transparent. I think they're following the process to the benefit of their credit union, which is fiduciary duty. I see it the same way as someone who hires a tax professional to take advantage of the tax code to save them as much money as they can on their taxes. And as long as everything's legal, that would be human nature. That's what you're supposed to do. In some cases, I thought a liquidation might have been preferable, but you have to put a rationale of why liquidation wasn't an option, and it was always too expensive. I had the opportunity to take a course on mergers and acquisitions in 2008. It was a Boston University course taught by Dr. John Sullivan, who was also a noted M&A expert. He said that his feeling was the merging parties frequently cite economies of scale as the reason, but it's hardly ever borne out by the data. And he said, especially in the banking industry or the financial services industry, economies of scale hardly ever or never resulted in lower fees or better rates for the members if you looked at it a few years down the road.
Hmm.
He thought that the
Really?
true reason for mergers was access to new markets, sometimes gaining the benefit of research and development, and of course, monetary benefit to people involved. So up until that time, I thought, well, it's just the way things work in the credit union business. And then I saw this is a criticism of using the rationale of economies of scale for mergers. A lot of the mergers I saw were with community charters as the continuing credit union. The members lived in the area and they could have walked across the street and opened an account and had access to all those services without merging a very well capitalized credit union into a continuing credit union. So I think that's the members' decision. But I think the members should have the facts to be able to analyze that decision. And the application process now just doesn't give them that.
Hmm.
Right. Wow. Okay. Well, that is kind of being dishonest, I suppose, or at least misleading if the member's being led to believe, oh, this merger is going to result in better rates for me or better access, when that's not really the case.
I think most credit union CEOs are good people, and a lot of them could be getting paid more in a different industry, in banking or somewhere else. But they love credit unions, they love the people, they like the idea. And there's some cases where it's intentional, particularly with respect to compensation deals. Now, the regs do require compensation in relation to a merger to be disclosed, but it's a very broad requirement, and deals can be structured to get around that full disclosure. And that's an area that might be more aptly termed dishonesty.
Can I ask you a quick question on that? Because when we do cover mergers, and Peter Strasniak, one of our reporters, he digs into the paperwork, the compensation reports. You were just saying there are some ways deals can get struck. How do you get around that?
It's use of deferred compensation. and going on to maybe benefit plans that
Hmm.
if a benefit plan is available to all the members of the continuing credit union, then the employee of the merging credit union goes on to it. They don't need to disclose that. And that could be a very lucrative retirement plan. Deferring something, I don't think that always gets disclosed. In some cases, it's misleading because the only thing that has to be disclosed is incremental change in compensation. Say, for example, somebody's going to get a $50,000 raise after the merger. That's what needs to be disclosed. Now, if the merging credit union all of a sudden at some point before the merger raise that salary to $500,000 from 200, you don't get the 550 after the merger. You get $50,000 increase.
Right.
Sure. When it comes to money, people like to get away with whatever they can, I suppose. Now, one other quick question. So, I know another thing you've said that's been happening is that the member merger vote, in most cases, credit unions will invite the members to vote on whether or not they're in favor of the merger, that that's being waived in some cases. Can you explain kind of how often is that happening? And then how is that happening? Who has the authority to waive a member vote?
NCUA does. I've read recently in Credit Union Times and Trade Press about 3 cases of that happening. The provision there, again, is a very broad provision of the reasons why they can waive the vote. And it basically says when the consolidation would limit the risk to the NCUSIF. And when they elect to waive the vote because of that, the members don't get any more information. They don't get a merger packet. They don't get disclosure. So they don't know what that reason was or how serious that reason was. It kind of stops the process and takes the members out of the room. There are probably cases where a sudden insolvency makes that preferable, but I would say disclose it to the members. And I think most people are reasonable. And if they saw that that was the only option, I believe they'd vote for it. Mergers hardly ever fail. I think there's risk to waiving the member vote that might offset the risk of taking a chance on letting the members vote.
To follow up on that a little bit, when credit unions merge without giving members adequate information about the merger or even leave them out altogether, does that harm members in any way or can it?
It can in some cases. First, in general, we're supposed to be member owned, not for profit financial cooperatives. One member, one vote. Of course, the tax exemption is always under attack.
Hmm.
And one of the things we cite in defense is we're member owned, democratically operated. When you take the democratically run part out of it, I think it weakens that defense of tax exemption.
Well, and it sounds like you were just making the point that this could actually harm the industry as a whole.
Right. With respect to the tax exemption, I think it's one of many factors that affect defensive tax exemption. And people often cite, well, there's lower amount of small credit unions and more credit unions that look like banks. But this is one thing that it's not a trend of consolidation similar to what's going on in every other industry. It's a regulatory requirement.
Yeah.
It could be changed. With respect to the specifics of what needs to be on a merger application, a lot of that is under control of staff without even a regulatory change, probably, as far as what information could be asked for. Anybody who works in any credit union who deals with the regulators know they ask for a lot of very detailed, specific data from us every day. But we've not seen the same thing on merger applications. And that's where I think it could be improved.
Now, David, I'm curious. Now, a lot of these things are obviously unique to the credit union industry, talking about the tax exemption and all that. But are some of these issues that you've been bringing up with the merger process also happening in other industries outside of credit unions? I know you mentioned that course that you took on mergers. Is that the case at all, or are these issues really unique and specific to credit unions?
At least in the financial services industry, what you see there is very similar. They cite economies of scale,
Hmm.
broader range of services. But if you look at the data, which Dr. Sullivan did going out 2 or 3 years in the future, you can't show a decrease in fees or better rates after the organization supposedly gained those economies of scale. And in fact, he said the most leveraged banks actually had the highest ATM fees. In that industry, those things seem to be about the same.
Let's go to some brighter sides here. David, what do you think are some of the components of a successful merger process, one that actually takes members' best interest into account?
I think a good merger, they would get full disclosure. They get some empirical analysis of this is how we think economies of scale are going to work. We're going to eliminate one of the headquarters buildings. We're going to eliminate a system. We're going to cut expenses in some definite, concrete way. And then, as we talked about, an accurate disclosure of merger related compensation. that really gives the full picture of what's going on. I think a good merger starts well before it becomes critical. And once it becomes an emergency, it's not going to be the best merger from a practice standpoint. It's going to be done quickly to avoid a loss to the fund. If it's a key person replacement or those kind of things are known in advance and can be addressed. I think a good merger, often mergers prevent losses to the insurance fund. That's good for everybody. It's good for the system. It's good for the members. But, in some cases, the reason for that could have been addressed earlier. Even years earlier, say, for example, a single employer group, encouraging them to add some other groups, add some SEGs, would prevent this kind of thing down the line. Generally, there's a lot of good mergers that occur and they avoid losses. If we got away from the euphemisms in the merger application and gave the members more of the real data, including compensation data, I think that would work.
All right, well, let's close out that merger conversation on that positive note. Wanted to ask you something totally unrelated on a different topic. So, while you've obviously spent many years working in the credit union industry, I know you've also had a separate career in the U.S. Navy. So, I was wondering if you could tell our audience a little bit about that career. And then also, I'm curious, would you say that serving in the Navy helped you succeed in your credit union career at all, or vice versa? Were there any kind of carryover of skills there between the two careers?
I would definitely say so. I had a career in the Navy Reserve as an intelligence specialist. Actually started when I was a corporate examiner. So I remember we were on the road all the time. So I had a meeting with my boss in the hotel, told him I was joining the Navy Reserve, and he was surprised. It was one of my greatest experiences in my life. I got to work with some of the best people I've ever known. Good people. They knew their jobs thoroughly and they looked out for each other. So as far as how that carries over, we try to emulate that culture here at Louisiana Corporate as much as we can. In the latter part of my career, I had the honor of serving as a Navy Chief Petty Officer, CPO. And chiefs go through an initiation process when they're selected to really make sure it drives the chief's culture into you. And one of those things is a focus on results, on getting things done and not making excuses. That's something that I think we try to emulate here. With all the compliance regulations now and analysis, you can get bogged down in analysis. You can get analysis paralysis, as they call it. But you have to keep in mind what you were trying to do when you started the project. So those are two things. And then I would say one thing, I did 2 one-year periods of active duty while I was in the Navy, one to the Joint Intelligence Task Force, Combating Terrorism after 9/11 at the Pentagon, and one at Guantanamo Bay. And particularly my most recent one, it was one of those experiences where I looked around and I was 55. I looked around, I realized I was like the oldest guy in the room sometimes. And honestly, until that moment, I thought of myself as mid-30s, I guess. In my head, I was not in my 50s. It gave me a lot of faith in the younger generation of soldiers and sailors coming up. They were dedicated people. They're different. They're more libertarian, I would say, than my generation was. As far as dedication to job, getting the job done, working as hard as necessary. At least the people I worked with in the military, those young soldiers, sailors were good people. And it kind of gave me a little bit more optimism about the future.
Well, let's finish this portion of the interview with a very blunt question, David. If you could change one thing about NCUA corporate credit union regulations, what would it be?
There's one particular regulation. It's called the limit on individual member deposits in corporates, and it limits it to 15% of the corporate's average assets. And it was put in after the U.S. Central failure because some of the larger credit unions would kind of use their deposit level to influence policy there by essentially threatening to take their deposits out. But in our case, as one of the smaller corporates, and I know this affects at least one other corporate too, we have members with more liquidity than they're allowed to deposit here. And in fact, we monitor it on a daily basis. And when they're over the limit, it gets transferred to the Federal Home Loan Bank or the Fed, or ultimately ends up in the banking system, liquidity that could have stayed in the credit union system in a period where liquidity was tight. And during the aftermath of COVID, because of the increased liquidity, NCUA actually had a policy of forbearing on this regulation, but they went back with it after. It's one of the few regs that doesn't have a de minimis, so I think it should, whether that be 35 million or 50 million. And in our case, that would allow us to accept deposits from credit unions with excess liquidity and make it available in the form of advances to credit unions that need liquidity. The other thing about it is it's regressive. When liquidity is tight, deposits go down, so our assets go down, so the amount we can accept from a depositor goes down. So that only aggravates liquidity.
All right, David, let's go ahead and move on to part two, which is the fun part of our interview because it is all about you. So, you actually served at Guantanamo Bay. Without giving away any top secret information, what is something interesting you can tell our audience about Guantanamo Bay that you learned or experienced there?
Well, one thing that would surprise people about how Guantanamo Bay really is that it's some of the most beautiful real estate in the world. But not only that, but the base itself is a large community. It has the sailors there, not reservists who are on duty for a year like me, but sailors that are stationed there can bring their families there and other services too that are there. They have large community housing areas like little subdivisions. So it's a community. Kids grow up there. There's a high school there. Some people go through high school like Guantanamo Bay. And then a little ways across the hills from there, you have the detention center, which is totally different kind of a place.
Mhm.
So it's a unique place with these two very different cultures. People think of it as just a big detention facility. It's more of a community as far as that goes.
Right. Where do you live down in Louisiana?
I live in on the north shore of Lake Pontchartrain. It's called Mandeville, Louisiana.
All right, great. I know exactly where you are. So I must ask this. I love Southern food. I grew up in the South. What is your favorite food or dish down there?
Well, I'm gonna say crawfish, just because crawfish boils, which is like a southern Louisiana version of a picnic in the spring, and a lot of families have family reunions and associated with them. So as much for the food as the good memories, I would say boiled crawfish.
You have to use so many napkins when you eat crawfish.
Yes, very messy.
It's very
And
good though.
yeah, David, this is interesting. This is actually, I think, the third podcast I brought this up in because we've talked to so many Southerners in our podcast so far. But I lived in Louisiana for a year. I lived in Lake Charles over in Southwest Louisiana,
Right.
and I do remember the crawfish was really kind of a cultural staple. You know, you'd go in just these little hole in the wall mom and pop shacks almost, and they would serve just this big round container of just the crawfish, and very messy, but very delicious. Yeah.
On newspaper usually.
Yep.
Yep. Okay. Now, this, I like asking this to people who are very seasoned in their careers to take a look back. What was your first ever job that you had in your life, like, as a young adult, after school job or summer job?
McDonald's. I worked at McDonald's.
Oh, wow. Okay.
How much was a Big Mac then?
What I'll say is for $5, you could get a complete combo meal.
There you go. Where did you work? In New Orleans?
It was a suburb of New Orleans. I started there in my later part of high school all the way through college. I worked Christmas breaks and summers and nights because I went to a commuter college in New Orleans for my bachelor's.
Uh-huh.
It was hard work, and you learn a lot of basic life lessons and some
Yeah.
discipline. I thought it was a good job. I think I started at $2.20 an hour, but when I learned how to be a breakfast cook, I got a raise to $2.35 an hour, which I was really proud
Yeah.
of.
Of the three, my brother and sister both worked at McDonald's. I did not. But yeah, that's cool.
It's not good for your complexion at that age.
Hell
It's
no.
not good. No.
All right. This question I love to ask. What is the last movie you watched?
Oppenheimer. I watched it on a streaming service, and I wanted to say at least watch one movie that was nominated for an Oscar. I thought it was good, a little touchy feely for me, but I'd recommend seeing it.
Okay.
Okay. Well, I think you're the first person who recommends it because we've had a couple other people say they watched it and say that they were just bored. So that's good to hear.
Yeah.
Give it a chance. I'm still debating on whether I'm gonna actually take the 3 hours out of a Sunday to sit down and take it in, but
Right.
I didn't realize it was that long. I must have gotten engrossed in it.
Yeah, it's pretty long.
yeah, yeah. Okay. Well, David Savoie, thank you so much for joining us today. We really enjoyed the conversation. Very informative.
Thanks for having me. You guys are doing great work, great podcast. I appreciate being on.
Oh, thank
Thank
you.
you,
We
David.
appreciate that. Yeah. And for all of our listeners, please subscribe to Shared Accounts with CU Times anywhere you get your podcasts, Apple, Spotify, Google, wherever. You know how this works. And if you'd like to rate us, we would love your feedback. And also, for those of you with questions or comments, feel free to email me over at nchillingarian@cutimes.com, or you can email Michael at mogden@cutimes.com.
Yep. Also, this month exclusively in our executive briefing for subscribers only, we've analyzed credit union and fintech partnerships. It's a revealing look at the tech connections being made inside our industry. You can subscribe to that executive briefing at cutimes.com/subscribe. A new topic each month. Check it out at cutimes.com/subscribe. Thank you so much to our producer, Zach Nyheisel. Please join us again next week for, oh no, a new month of shared accounts with CU Times. Until then, thanks for listening.